Hi everybody, my name's Griffin Bridgers. This is the Basics of Generation Skipping Transfer Tax, Part 13, unlucky number 13. But today, we're going to dive a little bit deeper into reverse QTIP elections and look at some of the why and the mechanics behind them. Now before we get started, I want to remind you this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. So to recap, back in Part 12, we discussed grandfathered GST trusts in the context of when the trust was created in comparison to when the current form of the GST tax was enacted back in 1985. Now, one of the little gems we picked up from that discussion was that a grandfathered QTIP trust has the reverse QTIP election that's deemed to have been made. And there wasn't much color to that at the time. And we also brought this up in the context of the estate tax inclusion period, or ETIP rules, back when we looked at that. And I gave you that punt and promise of a future standalone discussion at that time. Well, here is that discussion. So, like I said in earlier parts, and if you're new to this series, you have a lot of catching up to do on the prior parts. But this discussion on GST tax really assumes that you have knowledge of the gift and estate taxes. So it's important to have context there, especially around this idea of a QTIP trust. I can't explain this concept fully, but a QTIP trust is one where you can make a QTIP election to take a marital deduction for gift or estate tax purposes. But recall that the GST tax operates in parallel to the gift and estate tax, but they're separate taxes. So how do we reconcile the two? Well, to begin with, I think it helps on the estate and gift tax side to think of the QTIP election in isolation, to not worry about the GST tax, because remember, there's no GST tax for a transfer to a spouse or a former spouse. So the entire intent of the QTIP election is to take a marital deduction, but in that case, you aren't using any estate or gift tax applicable credit. So against that backdrop, one point I always like to point out is that the QTIP election is kind of like a light switch that you can turn on or off. And really what it does is through the application of the marital deduction, it allows you to choose which spouse, either the grantor spouse, the one creating the trust, or the beneficiary spouse, the one who's the beneficiary of the trust, which of them will use their applicable gift or estate tax credit on the transfer to the trust and or the transfer to the remainder beneficiaries of the trust. So essentially you're looking at the same pool of assets and figuring out who uses their applicable credit. So this is a switch. If the QTIP election is not made, i.e. the switch is off, then the grantor spouse will use their applicable credit for funding that trust. But if the QTIP election is made, then the beneficiary spouse will ultimately use their applicable credit because the property of that trust will be included in their gross estate under Code Section 2044. Now, this light switch concept really tracks with the fact that the QTIP doesn't have to apply to the whole trust. It's not all or nothing. You can make it over part of the trust or not make the election at all. But either way, if you keep that light switch analogy helpful, it kind of helps you narrow in on who will ultimately be treated as the transferor who's subject to gift or estate tax on that transfer. So the transferor's identity, as you recall, is an important element of generation skipping transfer tax. And we'll get to that in a minute, but I'm going to muddy the waters further here, basically because we have two confusing acronyms, QTIP and ETIP. So if you recall the ETIP rule from a couple videos ago, it's a rule that says that you can't use your GST tax exemption if the property you're transferring would be included in the gross estate of either the transferor or the transferor's spouse if either were to die immediately after the transfer. Well, recall how we talked about with a QTIP trust, if you make the election, then the balance of the trust is included in the beneficiary spouse's gross estate at death? Well, guess what? That creates an ETIP problem because assuming the beneficiary spouse were to die immediately after, you'd have that gross estate inclusion if the QTIP election is made. So what's the significance here? Well, the significance is that since there is an ETIP problem, the first to die can't actually apply their GST tax exemption, even if there's GST potential among the remainder beneficiaries. Recall, there's no GST potential as long as the spouse is alive, the beneficiary spouse, because they're not a skip person. So what we have to do is play this waiting game, allowing the beneficiary spouse to use their own exemption at some point down the road when they die, and at that point we have no idea what the exemption might be. It could go way down at that point. So you run this risk of wasting some of the GST tax exemption of the first spouse to die. And this could especially come true in a situation where maybe the grantor spouse has made lifetime gifts, but hasn't in tandem used their full GST exemption, so that they have more GST exemption left at death than they do applicable credit. So when you're funding a bypass trust marital trust combo, you run that risk of leaving some GST exemption on the table if this ETIP rule holds true. But wait, there is a valuable exception here which will keep that from happening. And that exception is found under Code Section 2652A3, under which there's an election to essentially ignore the QTIP election, but only for GST tax purposes. Now, your gut instinct may say, wait, if we ignore the QTIP election, does that mean a loss of the marital deduction? No, because this is a GST tax purpose only election. You're not reversing out the gift or estate tax marital deduction or QTIP election. You're only reversing out the effect of that QTIP election on the GST tax. So in other words, you're taking away this ETIP problem. So the effect here is that it makes the grantor spouse become the transferor for GST tax purposes, even though the surviving spouse would be the transferor for using their gift and estate tax applicable credit at death. So essentially it allows the grantor spouse to create a QTIP trust that's GST exempt at the death of the beneficiary spouse without requiring the beneficiary spouse to apply any of their own GST tax exemption to the trust at the time, even though they're going to use their own applicable credit to offset gift and estate tax that's due on that marital deduction trust and deferred through the QTIP election. So I know that's confusing, but I think the best way to illustrate it is to kind of identify who is the transferor for either estate and gift tax purposes or for generation skipping transfer tax purposes. So here we see a QTIP trust, and we have the grantor spouse on one side and the beneficiary spouse on the other. So for gift and estate tax purposes with the QTIP election, the grantor spouse does not use their applicable credit for a transfer to the QTIP trust because that's offset by the marital deduction. However, the beneficiary spouse will ultimately use their applicable credit because that portion or all of the trust for which the QTIP election was made will be included in their gross estate for estate tax purposes. So in other words, looking just at the top, this means that the beneficiary spouse will ultimately be the deemed transferor for gift and estate tax purposes only. But moving to the bottom, we see the same illustration, but we have the identity of the transferor in green essentially swapped now. For GST tax purposes only, if there's a reverse QTIP election here, then the grantor spouse will get to use their own GST exemption, and the beneficiary spouse will not use their GST exemption. So in other words, no matter what, the grantor spouse will be the deemed transferor to the QTIP trust and to any future skip persons for GST tax purposes only. So hopefully that kind of helps you break it down. So the big question is, when you're reporting this, you can report it on either a gift tax return, Form 709, or on the estate tax return, Form 706. Wherever you're making the QTIP election is where you're also going to make the reverse QTIP election. The form, not the part of the form. The part of the form is going to be a little bit different, so I've called that out here for the Form 709. Here we have a snapshot showing that if you're going to make it, you check the box and list out on this line the item numbers back from Schedule A of which gifts went to a QTIP trust for which you're making the reverse QTIP election. So you have to list them out. You may have to have a C continuation and attach a continuation schedule there if there's not enough room to list out the line numbers of all of those gifts. Now, on Form 706, it's a little bit more complicated. There is no box to check, but you find this on Schedule R of the Form 706. And you'll see on Part 1 towards the top, it tells you you no longer need to check a box to make that reverse QTIP election. Instead, you simply need to include the qualifying property in Part 1, line 9 below, which I've taken a snapshot of at the bottom. So as we're going to find out later when we talk about allocation of GST exemption on Form 706, this is done by listing out each trust and the amount that was previously allocated and additional amounts allocated at death as well. So we'll look at that later, and you use that same mechanism for a QTIP trust, just simply treating it as if the deceased spouse is the transferor in that case. Now, again, I want to remind you that this only applies to a transfer to a QTIP trust. This doesn't apply to any direct transfer to a spouse. And it doesn't apply to especially any direct transfer that qualifies or doesn't qualify for the marital deduction. Because remember, in that case, whatever the transfer, there's no deemed gift to a skip person when a spouse is involved. A spouse or former spouse is never a skip person. So you're only going to look at this in the context of a QTIP trust. So what's coming? Our list is slowly shrinking. We're slowly getting to the end of this GST tax basics discussion. So we're going to dive into some more abstract concepts coming up, some valuation points to note. We'll talk about Gallo Trust, which is another special carve-out within the grandfather trust realm. We'll consider some ILET issues that can come into play. We'll look at charitable lead trusts and how you can allocate GST exemption to those, especially if there's no reversion in the charitable lead trust. And then finally, we'll have a longer series, which is a case study of GST exemption allocations on Form 709 for different types of transfers like GRATs, charitable lead trusts, ILETs, direct transfers to a grantor trust, crummy rights, whatever the case might be. And then finally, we'll look at GST exemption allocation on Form 706 at death. So here is another rundown of our glossary of terms for your review. We didn't add any new terms today because we've already talked about the reverse QTIP election, but ironically I see it's not included on the list, so I will add it for next time. But I thank you again for listening to today's presentation. If you have any questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com with the caveat that I cannot give tax or legal advice in response to your questions. But I thank you again for listening to this video, and I look forward to seeing you in my future content.